Hi, everybody. Welcome back to another edition of VCTV. I'm your host, Kyle Ellicott. I'm joined with some outstanding co-hosts today to talk about our favorite subject. You called it. That is blockchain. We're going to be talking about investments in blockchain, what's happening in this entire industry. We just talked a little bit about what's happening today, but there's so much more to this industry as we know. So we've got some great co-hosts from around the world as investors to share with us their perspective of what they're seeing, what they're noticing in the market for you as investors and entrepreneurs to understand how to navigate this ever-evolving space as well. And a big thank you to the LATOKEN team and Maria for making today's episode possible. Greatly appreciate it. Check us out on latoken.com for much, much more as well. With that being said, everyone, I'm your co-host. Let's jump in and introduce my other co-host today. Noble, welcome back to the show. I believe this is your third of the day here on VCTV. You're almost hitting for the full cycle here. So let's take you on a grand slam out for the day. A little intro, a little background.
Hi, my name is Noble Dracone. I'm the founder of Dracone Capital Partners, as well as an NFT blockchain startup called bandroyalty.com. I've been in the investment industry for almost 29 years. I've written 7 books on trading futures and Forex and options. Bestsellers are Winning the Trading Game and Trade Like a Pro. I've appeared on Bloomberg, Fox Business News, etc. And I work with startups from around the world. I am an advisor for M Accelerator, and from time to time I work with Expert Dojo in Los Angeles as a mentor. And it's a great time to be in the industry. I started off at 2:30 a.m. with LATOKEN and went to 4 a.m. and now here I'm at 8 a.m. So happy to see you, Kyle.
Happy to see you as well, and thank you for pulling the long shift with us. We appreciate it. David, welcome back to the show. A little intro, a little background.
Hey, Kyle, how you doing? In contrast to Noble, I am in the 11 a.m. time zone right now. So hello from the East Coast. My name, again, is David Towell. I am the president of ProChain Capital. Contrast to Noble, my background is not in trading, but long-term fundamental investing. Although I recognize that now Noble is an investor as well in many ways. My hedge fund invests in tokens, both long and short, equities of blockchain-related companies, both long and short. And then we also have some venture and seed level investments. And as we were discussing before we started, our fund is a hedge fund, so it's open-ended. So I am constantly raising and deploying capital.
Wonderful. Welcome back, David. Last but not least, Matthew, welcome back to the show. A little intro, a little background for everybody.
Yeah, great to be here again, as always, Kyle, and good to be with the panelists who just introduced themselves. I'm Matthew Lemerle. I'm based in Silicon Valley. We are blockchain co-investors, which is the leading blockchain fund of funds. So we're invested in 25 blockchain VCs globally, all the big names. And then we operate a co-investment program. We are, in fact, investors in about 300 blockchain companies and 30 of the blockchain unicorns, the Krakens and Coinbases and Ripples and so on. So that's what we do, and been doing it now since 2014. So this is a space that we care about a lot. And for the 20 years before that, we were very focused on internet, fintech, and financial services. So with that, I'll hand back to Kyle.
Wonderful. Thank you. And Noble, I want to kick it off with you today. I mean, you've been buried in this world of non-fungible tokens, but also seeing a lot around the play to earn business model arising around blockchain and the digital economy. Talk to us a little bit about what you're seeing happening in the investment space around blockchain. I gave the audience a rundown of what was happening in the last 24 hours. It was long, tons of great companies raising seed or early series. So we know there's a lot of activity, but take us a level deeper on what you're working on and why NFTs and this play to earn model are so important.
It's one of those things that I've believed and I've talked about since the beginning of the pandemic, that the new gig economy is going to be the play to earn, or the bottom line is gaming. Mobile apps, the ability to acquire and build wealth. Because immediately when COVID hit, no one could no longer do Airbnbs, or, they had to go from being Uber drivers or Lyft drivers to being delivery drivers. And we know that that's not the way or pathway to millions. But with the integration of NFTs being a reward system, going from what we originally saw as skins and avatar, tchotchkes and development, now being something where people are actually have open marketplaces utilizing blockchain to trade and swap. It's changed the landscape in a big way, and that means that more and more money really is funneling into the space. And so while we already knew that mobile apps were making tons of money, Tencent on their games were doing hundreds of millions a year, to the point of where the Chinese government was shutting them down from introducing their games. We're starting to see a mix of the egalitarianness of the companies now sharing the rewards with the players by really pushing the NFTs. And then when you have crypto being built in, you had the tower game developed by Enomoto. Those guys put out a token that immediately attached to it, and their fan base absorbed it up and started understanding that they could actually earn crypto while playing. And so this is really the pathway for a lot of people, and particularly when people are trading their entertainment time for money. You can't really get better than that. The real question becomes more so now, are we heading into a full-blown gambling phase in the gaming world while you're starting to integrate these things? Is it now becoming an idea that it's great that we're creating the play to earn, it's great that NFTs are being released, but are we going to find that the blind box phenomena that went in front of Congress the first time almost 4 or 5 years ago is now going to intersect? But it's a space that is bringing, I guess, crypto to the masses. It allows for DeFi. It allows for the ability for regular people to participate and comprehend it. Is this the thing that everybody's been asking for this whole entire time that's going to make crypto the ubiquitous thing it needs to be so that it integrates fully into the economy? And I think it is. NFTs have really paved the way psychologically for that. Now we have to deal with the repercussions.
Matthew, thank you, Noble. Matthew, any thoughts on that and that business model in general?
Well, I broadly agree with the thoughts, which is, all the world's assets are going to be digitized. We won't have paper-based assets in the future. And, that's true of real estate and private investments and funds just as much as it's real for collectibles. We will have digital certificates associated with everything in our lives, including everything we own. We will have digital identities, by the way, and we will have digital identities for all of our possessions and for all of our information. Most of our information online does have an identity of one sort or another already. And the NFT non-fungible token movement is really just about extending that thought process. Essentially, an NFT is just a digital certificate associated with a good, real or virtual. And we already have those conceptually. Public equities are digital certificates that give you ownership of an underlying asset, which could be an Amazon share. So none of this is really new. And I'm beginning here, by the way. I'm beginning here because I think a lot of the confusion out there is caused by the fact we've called it non-fungible tokens. We don't call these things non-fungible homes or non-fungible real estate or non-fungible Ferraris or non-fungible Leonardo da Vinci's and modern art, right? We don't use that non-fungible baseball cards. So I think by using this NFT name, we've confused everyone in the world. All we're doing is we are digitalizing items of value and allowing buyers and sellers to come together digitally to buy and sell those items. And that's the future. So I agree with the other panelists that this is really, really important. And you need to pay attention because it's a glimmer of what everything is going to be like. And a lot of value is being created right now, both by the people that happen to be in the right place at the right time and by the right ones. Not all of these things are going to be valuable, by the way. But an awful lot of value is being captured by the people that are building the infrastructure and the platforms to support new ways of sharing value. And so the NFT platform companies are capturing a lot of value very fast. And with that, I'll hand back to you, Kyle.
Thank you. Couldn't agree more, Matthew. And we also, on the real estate side, as you brought that term in, I think it was yesterday or the day before, sometime this week, we had an announcement that Proppy, if I'm pronouncing that correctly, would be tokenizing Michael Arrington, the founder of TechCrunch, and also Arrington XRP Capital. They'd be tokenizing his apartment in the Ukraine, as a NFT, so a piece of digital art. So let me clarify this. It would be multiple NFTs. There was the digital art piece. There was also the transfer of the ownership if someone bought this non-fungible token that represented a piece of digital art. And then they would become the owner of this real estate. So to Matthew's point, there is multiple pieces of NFTs or multiple layers, but also we're seeing property and real estate finally entering into this space, which has always been something people have talked about as well. So, but I'll come back to NFTs in just a moment. David, I want to come to you. Any thoughts on this conversation around NFTs and also just in general the play to earn model? And then I've got another question to follow up with you on.
Yeah, so I actually want to take the discussion a step further, and I'd like to hear fellow panelists on this point. You know, we've been thinking very hard at ProChain about the different types of value or the different assets that are being digitized. And, you know, the NFT space, not to cast any aspersions on the people involved in it right now, but it's largely right now in terms of practical activity for fanatics of some form or fashion, whether they be fanatic about art, about collectibles, about gaming, and so forth. And I think that those communities have enormous value, and frankly, they don't care about anyone else that is outside of their community. And I think longer term, you know, that is where there is going to be real value. Those NFTs are going to have value. Ironically, right now, seems to me that the world, other than the NFT focused folks, is really caught up in the smart contract world, which is, you know, let's talk about Ethereum for a second. The platform by which those contracts, which essentially in some cases are non-fungible, are being built on and transferred through those platforms, to me, longer term, that's a race to the bottom. Because at the end of the day, if the asset is what it is, it can be traded on whatever digitized platform there may be. Usually, if I were, you know, someone that's, you know, transferring, I'm going to want the cheapest transfer possible. And so, you know, there I think is likely to be, you know, a ton of development there with a very fast race to the bottom in order to go ahead and make it as cheap of a transaction cost as possible, because the underlying contract in and of itself, absent the two parties involved to the contract, is not worth very much the same way a piece of art may be, you know, in the NFT world. And so, you know, that leads us, and again, I really want to hear from the other panelists on this, you know, shorter term, we're quite bullish in the you know, I'd say the platforms and the, you know, the smart contract world, because we think that there's a lot of immediate activity that's going to be taken up there by the business world, by the legal world, by a lot of white collar players. But I think over the long term, where you find the real value, underlying value, is going to be in the NFT space. For now, we're invested in a lot of NFT, I'd say, infrastructure, the platforms that trade the NFTs, not the NFTs themselves. But my expectation is that we will at some point rotate, you know, from these platforms that are more smart contract type and into, you know, more NFT focused investments.
Great question. With that, I'll open it up to the floor. Noble, you want to start? All right, well, go ahead, Matthew. I'm sorry, you raised your hand. Oh, Matthew, we had a little bit of a delay there.
Yeah, sorry, I think there's a bit of delay on the line. So I just wanted to respond to that, David. And what I'm about to say may sound odd, and especially given who we are invested in a lot of NFT platforms, including Dapper Labs and OpenSea and Animoca, Gala, Concept Art House, and a host of others, Forte, Raleigh, and so on. But I feel like we've seen this before, you know, and I've seen it many times before. And I think we should be careful. The ICO boom and bust, I think, taught us something. And I do believe we're going to see something similar in NFTs. And what I mean by that is, you know, we had, like 18 months ago, we had solutions looking for problems, and no one really knew what to do with this. Now, all of a sudden, we've got some traction and some reality to the space. And then we're suddenly got too much interest, too much excitement, a lot of FOMO, and a lot of what people are buying and selling, I think, will actually not be worthwhile and will not have value. And worse than that, I think a lot of people are beginning to create walled gardens where there is no interoperability around the asset. And I think some of those walled gardens will fail. So I, for one, am being very careful, and I would encourage everyone else to be very careful about what NFTs you buy. I mean, is it really, really something you want to own? Do you really value it yourself? And if the walled garden crashes, or if you can't trade this asset in the future, will you be proud to own it? Because if you're just buying it in the hope of a future return and you're really a speculator, I think a lot of this will go to zero, and especially because I think some of the walled gardens will fail and the NFTs you may have bought will be stranded and orphan assets. So I'm sorry if I'm throwing, you know, a bucket of cold water on the space, but I do worry about that. I felt like the ICO wave, it was very predictable. You know, 80, 70, 60% of the ICOs were never going anywhere, and a lot of people lost a lot of money. So I'm just saying that as sort of a cautionary note.
Oh, man.
I think you're right. And Noble, go ahead.
Oh man, I want to piggyback on what Matthew said. I've been telling people this. So you know, I've been on this show proselytizing NFTs before the boom, and so I'm going to say, and I'm 100% concurrence with Matthew on this. There'll be a lot of people with buyer's remorse, and just to be self-referential, because I looked at the space and I had the same feelings, we decided to take a different approach when we created our NFTs. And because we've created the art component and we've blended it with access to music, we are dealing with a lot of different regulatory issues and concerns, to be honest. We've paired all of our NFTs where you have an opportunity to do a DeFi component and get access to real world performance royalties and copyright royalties and sync royalties for music royalties that our company buys. And we realize that at some point there would be a collapse. It may not be tomorrow, it may not be 5 years from now, but we still wanted those people who held on to our NFTs to have an opportunity to at the very least be able to stake them and then have the ability to generate or share in the revenue that we're creating. And because of this decision that we make, we've talked to attorneys on 4 different continents. We have an attorney in Singapore. We have an attorney in the US that we're talking to. We've talked to attorneys in Canada to make sure that we are not really securitizing the NFT, but we're also giving it a basis and what things we can do to create a basis of DeFi. Because the only other alternative, as other DeFi products do pop up to prop up the NFT market, is you have to trust a third party or a stranger in hopes that they won't abscond with your NFT, or you have to have a smart contract, to David's point, to be involved to make sure everything is kosher. So we wanted to be fully vertically integrated as a company to not only have the platform, because we developed our own platform, have the NFT, and then have a DeFi component to it. And that takes a lot of effort that goes beyond just creating art and pushing it out. You know, David said it best. The idea of the smart contract is a race to the bottom, but the reality is the smart contract is needed if people are going to really continue to hang their hat on this concept of decentralized. And, you know, we talked about it before in the show, Kyle, that decentralized does not mean not regulated. It just means decentralized. And because things are trying to be decentralized, the smart contract will always play a key point. And I think that as long as regulators give a lot of deference to the idea of this communal voting and decentralized activity, there's a possibility for, and there's always going to be a possibility for the smart contract and the NFTs to work side by side. The focus, and like I said, what we decided was to try and create a DeFi component from day one, because you don't have to be a psychic. It's very easy to be prescient about where these things are about to head. And you have to really focus on loss mitigation at some point and what that looks like for you. So I'm a big fan of NFTs, don't get me wrong, but as the author of a book called Futures for Small Speculators, I've always believed that speculation has its place, but speculation and investing are not the same thing. And unfortunately, too many people are trying to correlate them.
I think you've got shaking heads and agreement all around, Noble and Matthew and David as well. So David, great question. You know, with that, I want to come around for opportunities. I mean, we are looking all over this space, and we've talked a lot about NFTs, so maybe shifting gears of where else you're seeing opportunities from each of you as investors right now. I read some great headlines this morning. I've been diving deeper myself into things like bridges. So we're seeing a lot more activity of bridging scaling solutions in the layer 2 space, back to the layer 1 and vice versa to native blockchains to help improve transaction speeds. I've been very excited to see how that's continued to roll out, and we've seen a number of investments announced in that space as well. So I'll throw that one out there. But Matthew, I'm going to come to you next. Opportunities you're seeing that people can build or invest in, and just in general in the blockchain space.
Okay, so I'm not going to leave NFTs just yet. I mean, and here's the reason why. I think there's some other audiences out there, including some of the listeners, who we should talk to, because this breakthrough, this technological breakthrough, is not really about investors. Yes, it is right now a place where you can go and buy and speculate and invest and do whatever you want. But that isn't really what this is about. This is about enabling artists and holders of IP and brands to connect to their global communities and fan bases directly and in a very efficient, streamlined way. And so, you know, that means that there's other audiences we should just give a nod to. So if you're an artist, you know, you've struggled to find the people who want your art. That's the truth. I mean, most artists sell their art for less than the cost of the frame that the buyer puts around the art. Now you can have global discovery, which means you can expose your art without expensive intermediaries, gallery owners or others, you know, music impresarios or whatever. You can expose your art directly to the people that want to hear or see or buy or experience it. And you can do that in relatively simple ways. And in fact, I think you'll see in the next year or so, essentially like YouTube's for NFTs, user-owned, user-generated content where you can easily go and NFTize it and make it available on a global basis. And I think that's exciting. I also think if you're a brand or an IP owner, you could be Disney, you could be Nike, you could be a team, you know, and on and on and on. You have an opportunity now to complement your existing products and services with new digital experiences and new digital twins, if you will. And they are very powerful because they're software. So think of this as being global loyalty programs or global go-to-market programs that are leveraging NFT technologies in their design. And that is very big and very exciting. And now let's just give a nod to the entrepreneurs. LATOKEN has a lot of entrepreneurs. I'm sure more than half the people that will listen to this are entrepreneurs. And so the other two things I just said mean that there's a lot of opportunity for entrepreneurs. And if I was an entrepreneur, I would seriously be thinking about building something in this space. And what is that something? Well, there's a lot of choices. There's a lot of horizontal technologies needed in the NFT space right now around identity, provenance, anti-copyright infringement, anti-piracy. You know, there's a lot of technology we need to complement this space, and some entrepreneurs are going to build that, and they're going to do really, really, really well. In fact, tens of millions of dollars are available to entrepreneurs right now who can really articulately say what they're going to plan to do in this space. So anyhow, I would just stick there for now, Carl, hand it back to you. But those are three audiences where there's opportunity in NFTs.
Love it. Absolutely great point. Noble, you have to follow that up. I apologize, but I know you've got some good ones as well.
Well, you know, and it's tough to leave the NFT space, but, you know, again, Matthew hit the nail on the head. And then there's also custodianship. Yep. There's actual true security. There's also the issue of whether or not the items are actually secure and are on a decentralized web. So the extension of IPFS, and to be able to actually have true ownership of the image, because people had issues where their NFTs were disappearing. So there's a myriad of support services necessary for the industry. Authentication, you know, even though it's on the blockchain, whether or not the person creating is the credible person who actually created it in the first place. But for us, the idea is always to intersect those real world income streams directly in with the NFTs and really give an opportunity for the NFTs to have a life. And, you know, from, you know, when we're talking about all of it in the art and the very high level thinking, but there's some really pedestrian activity that needs to occur and that NFTs open the door for. So title companies that are fully NFT developed, which will take us from the 50 pages plus of paperwork to the one NFT that really gives ownership and then confers that ownership to the next person. The digital identity of a person, knowing what their credit score is and not having to fill out 30 documents over and over again to get approved for loans. Those things will literally be 100% tokens that will immediately ping through these smart contracts, and you'll be approved for the property, and the property will be passed to you, and those transactions will happen within minutes as opposed to 30-day closing schedules. I love, you know, you start off down the path of the bridging and the concept. I'm a big fan of Polygon. I've been an investor in Polygon from day one, and I like the Matic protocol. And there's more to come. You know, we're right now talking to people in EOS, and EOS, I believe, is one of the best commercial. Again, you know, full disclosure, I'm an investor in EOS, and the producers, some of the producers we're in talks with. But I'm a big fan and believer of EOS as a fully comprised commercial opportunity for the banking system because it's a straightforward software that was created. So there's a lot of places as an investor that you can target, from the startup to those people who are intermediary in the space. I say that there will be a shakeout, and we will figure out what that shakeout looks like. I think it's going to be a lot sooner than people expect. Now that the regulators and all the economists are talking about inflation as an issue, while we're supposed to be in a deflationary period. And so there's a lot of interesting real world plays, from investing in PayPal to investing in Stripes and other companies that are starting to really be aggressive in their push for the crypto as an alternative opportunity for businesses to utilize. So there's some great opportunities all across the board. I just tell people to stay nimble. And, you know, Matthew said it best. Don't let the nomenclature, don't let the language confuse you. We've been dealing with, you know, we're all non-fungible people here. There's only one Kyle, there's only one Noble, only one David, and only one Matthew. So don't let people use language to confuse you and keep you from participation.
I agree. There may be one more Kyle out there. I don't know, but nonetheless, I will consider myself an NFT for the moment, non-fungible. That being said, I definitely agree around storage and custody. I personally am very bullish on both areas as well, and all of those that you mentioned, including anything around decentralized applications and just that movement from Web 2 to Web 3 and these new distributed and or decentralized applications, slightly different, but nonetheless. I will agree and add those to the bucket. David, that leaves you. Anything else you see? Anything we didn't cover? Anything you're seeing as opportunities for those out there as well?
Yeah, I actually have a few points to go ahead and add. So look, I think Matthew's points and Noble's points, if I were to sum up a little bit of what they said in a theme, is cutting out the middleman. And as you know, Kyle, I say the word boring on a lot of these shows. Contracts, knocking out 50 pages, from a process, lawyers, insurers, so on and so forth. To me, that's a no-brainer. I think that's a no-brainer to anybody except the middlemen themselves. And so I see, value there. How to play that is unique from what I'll talk about in a second. You've got to make sure that you're not playing the race to the bottom investment, but you're playing parts of the infrastructure or the plumbing that are going to be necessary and are going to make money nevertheless, because overall the cost structure of the entire transaction is going to come down. On the other hand, when it comes to unique assets like art, music, even difficult to understand financial assets, I've learned over my years, the middleman sometimes has value. This is all they do for a living. They screen for great artwork, quote unquote. What that means, I don't really know. I'm not an art aficionado. They screen for great music. Again, not sure. I don't have that ear. Or in the case of very difficult to understand financial assets, they do analysis. And that's part of the added value of the middleman. Now, granted, the value they're adding may not be worth as much as they're charging for that middleman value. But what you want to make sure of before you go gaga on NFTs and try to go ahead and gut the middleman out of this, make sure that the population is going to follow. Maybe some will, maybe some won't. Maybe certain people like their art dealers. I don't know. But just, I think it's important to be sensitive about the cutting out the middleman theme and exactly how important, how valuable the middleman is. And certainly you don't want to be trading one middleman for a more expensive middleman, obviously. And then the last point that I'm going to make, and we didn't talk about it yet at all, and maybe it's not for this show. Go ahead and stop me if not. But the fact that Sheetz, the convenience store chain, is now accepting Bitcoin is an interesting piece of news to me. I would like to know how many Kit Kats are paid for in the next quarter by Bitcoin at Sheetz convenience stores. I got to tell you, if Sheetz can put up any material number on this Bitcoin transaction for gasoline, I quip that you could probably transfer one Bitcoin to a Sheetz location and take all the inventory home with you. So I am curious to see if this is just, to generate buzz, or if in fact it goes somewhere. If it goes somewhere, I think it turns, every early day Bitcoin analysts, thoughts on its head. I mean, the fact that it would be, used for, retail transactions of that size, I think we're in another ballpark at that point. And I think we could see, Bitcoin off to the races. Do I think it's likely that Sheetz puts up a lot of Bitcoin transactions? I think it's unlikely, but let's just watch and wait.
I have a big smile on my face because I would like a Kit Kat right now, but I will just have before Matthew goes, I will add, aside from my craving for a Kit Kat, is that Apple yesterday, just as a point of news I forgot to mention earlier, Apple is also looking to hire someone on their team for alternative payment partnerships focused around digital payments and cryptocurrency to bring into the wallet, Apple wallets as well. So maybe that is to come, but I'm going to turn it over to Matthew for a more detailed explanation.
Well, I just wanted to partially build upon, but actually also a little bit disagree with David's comments. But I am sort of building upon them. I'm going to bust apart the issue of intermediaries, and I'm going to say this is a generational issue. I'm agreeing with David's point that intermediaries will always play an important role for a generation of people that isn't ready to go digital. And those people are at least half of the world right now, and they are aging and they have a lot of money. In fact, they still control the majority of capital, but they are aging and they will have trouble, many of them, not people like me, I hasten to add, but many of them are challenged. They don't want to do mobile banking. They don't want to listen to their music online. They don't want really to do conference calls by Zoom. Some of them do, most of them don't. And so it's going to be a long time before we get rid of paper and we get rid of intermediaries, etc. However, there's another generation of people, which is the other half. They're called digital natives. The leading edge of them, I call them Generation C, by the way, the connected generation. But the leading edge of those people are now in their early 40s. They are highly digitally aware because that's all they've ever known. They are entering their peak earning years. They're beginning to have a great deal of wealth, and they do want to use it through digitally native platforms. And they see no reason to pay for intermediaries who don't really have a role in the digital world. And I'm agreeing with David's point that the digital world that we build should be more streamlined and more efficient, and I think it will be. And I think it will be beneficial for buyer and seller, because I think a lot of the dead weight loss of paper and intermediaries will be eliminated. And I think that is a lot of the promise of the decentralized, distributed DeFi movement. But it is going to take a while. So I wanted to say that because I do agree with David's point. But on the other hand, I spend 100% of my time in the disruptive portion of the story. And I see no value to intermediaries in most businesses and most industries, in fact, when we get into a fully digital world. So I'm very intent on giving that value back either to the buyer or the seller and getting rid of the people in the middle.
So this episode is not sponsored by in any way, shape, or form Kit Kat. However, I did find a Kit Kat in the office. So there you go, David. It was not purchased with Bitcoin, but nonetheless, it is here. So there's a Kit Kat, everybody.
Those ones for Halloween, right? That's just been laying around the office since Halloween.
It has. As a matter of fact, it has. But it's okay. It's a mini one, so it's okay. It's not a full Kit Kat, but nonetheless, there you go, everyone. With that being said, I want to come around for closing thoughts. I love this conversation. It's great. We can continue for another 2 hours, but there's so much I know each of you have today, our audience as well. So, Noble, closing thoughts. Where can everyone find you?
Yeah, it's easy to find me. You can find me on LinkedIn, Noble Dracone. You can find me at bandroyalty.com. You can also find me on Twitter, which is my last name, @Dracone. You know, final thoughts is that, you know, a decade ago, people were laughing about blockchain and how it wasn't going to exist, and Jamie Dimon was poo-pooing it. And now all of a sudden, everybody is a big believer and has faith in the idea that we're going to continue to drive forward. I think that the failure of the understanding about blockchain is the cryptocurrency side of it and the speculative side of the NFTs. the real power and the real awesomeness of this is the distributed ledger technology that underlines all this. It really sets the stage for the first time a global recording of history all at once, all the time, that doesn't disappear. And that is that's kind of the promise of this Web 3.0 that has so many implications that we have to really be futurist even while we're living the future all at the same time. And so I think that in the long run, invest in the space, but also be very cognizant that the infrastructure is just as important as the tchotchkes, as the shining baubles of NFTs and cryptocurrencies. The infrastructure is really the core of what this is all about.
Thank you, Noble. David, closing thoughts, where can you be found?
Closing thoughts. I don't know. Generational, maybe understating it. Opportunity in terms of changing the way so many things, if not almost everything that's done on our planet. And I think there will be tons of efforts. Some will succeed. Many will fail. And I am not a visionary. Never thought of myself as one. If you're going to put money into visionary type investments, I think it's important to invest with a visionary like my two co-panelists. And if you're a shorter term investor, it's important to know not to fight the tape, and frankly, know where the investing public, as not smart as they may be, is going in the shorter term, and invest, with a more shorter term focused investor, and certainly have your wits about you. Unless you do this full time, I don't think that it's something where you can try your best to pick winners and losers. I think it's best to go ahead and be aligned with someone, and you need the middleman here, you need the intermediary here, that's going to go ahead and find, I think, the right opportunities for you, because the landscape is changing so quickly on the one hand, and on the other hand, the revolution has so much upheaval that I don't think most people can foresee, even a year out, let alone 5 to 10 years out.
Thank you very much, David. Matthew, close us out.
So I'm easy to find, blockchaincoinvestors.com. And my closing thought actually is someone was asking me just a few days ago, why am I on LATOKEN so often? Because I do join Carl, a couple of times a month. And they said, why do you do that? And I said, and this was the reason. I mean, I learn a lot every time I come here. I really do. I listen to my fellow panelists, and I learned some stuff today. I also practice my own narratives. I say things and I listen to the others. I listen to myself, and I feel like sometimes some dots get connected, and that's why I'm here. And so my closing thought is, come more. If you are listening to this, don't keep on coming. Carl, at some point, I'd love to have some interactive dialogue with our audiences in a different format, like a Ask Us Anything type of a format or something like that. But until we get to that interactive day, let me just say, keep on coming to LATOKEN. I learn a lot, and I hope you do too. And with that, back to you, Carl.
Thank you, Matthew. Thank you, David. Thank you, Noble. Love the idea as well, Matthew. Let's put together an AMA session. So audience, stay tuned. I'll drop it on social with the team. So get your questions ready. We may do it in the next week and a half, just a little teaser for everybody, but we'll do a live format. You'll drop your questions into the comment box on a few respected platforms. I'll watch them as they come in, and we'll have a little one-on-one feed as well. Great idea, Matthew. Thank you. Again, gentlemen, thank you so much for the time today. Audience, thank you as well for tuning in. Hope you enjoyed today's episode. If you did, which we think you did and know you did, give us a like, share, and also subscribe to this channel as well on your respective social media networks. We'd love for you to tune into more, and also check out all speakers on LATOKEN.com to hear from each and every one of them on a number of different topics here on VCTV as well. I'm your host, Kyle Ellicott. All of us would love to hear from you, whether you're in the blockchain space, you're building, you're investing, you want to talk to us further, reach out. We'd love to hear from you and love to have that conversation, but make sure you add context, where you heard us, where you met us, and what you would like to continue the conversation about, whether it be DeFi, NFTs, dApps, blockchain, anything. Let us know. We're looking forward to it. With that, everyone have a wonderful day. We'll see you back here in just a little bit with more VCTV. Thank you to the LATOKEN team and to Maria for making today's episode possible. Take care, everybody.
Thanks.
Bye.